Right, lads, this is the 2013 Tabular statement. It's only a 60-mark question, so we should be able to get through fairly quickly. So I've laid out my assets at the top, liabilities at the bottom. You see goodwill, and it's 45,000. We don't have to put in goodwill written off or anything, so we're just going to put in that 45,000 as our first one. Then we've land and building 77, minus the 54,000 for the accumulated depreciation. Then 90,000 for delivery vans and 40,000 for its depreciation. Just change that to delivery vans. Your assets stock 91.6 and debtors is 55.8, and there's no bad debt provision, so it can go straight in. Creditors 75.4, liabilities obviously bank 15.8, 4.2 for expenses due. Issued share capital is 600,000. Share premium is 80,000, and profit and loss is 140,000. Okay, so that's them all. Assuming I've done it right, they will balance. At 915,400. And I have. Okay, so that's on the first. No marks for what we've done there. We've got our 6 or 7 workings to get through. Nothing too difficult, I don't think. So the first one is the buying the business. So Cooper bought an adjoining business on the 1st of the 1st, which included buildings costing 350. So land and buildings go up to 350, or by 350 even. Delivery vans go up by 70. Stock goes up by 25. Creditors goes up by 30,000. He bought the business by giving them 380,000 shares. So shares go up by 380 at a share premium of 20 cent. So we find 20% of 380, and that's 76,000. So at this point, 380 plus 30 is 410. So 486 is the bottom. And the top is less than that. So the top adds up to 445. So the difference between those two numbers, 445 and 486, is that 41,000. So that's our goodwill. Okay, so that's the first one done. So goodwill is our balancing in that one. Next one. So creditor who was owed 8.9 by Cooper accepted the delivery van, the book value of which was 9.5 in full settlement of a debt. So the creditor is owed 8.9. Doesn't matter what he accepts, creditors go down by 8.9. Okay, he doesn't owe anything anymore. He accepted a van whose value was 9.5. So we've given a discount of 600, and discounts reduce our profit. So that brings up to the 9.5. Okay, so the van has to go down by 9.5. So it's the van and its depreciation in effect. So the van had cost us 14.5. So minus 14.5 goes down there, and then the depreciation, to get rid of it, you add it back on, is 5,000. So now it'll balance at 9.5 each. Okay, so just always think about what that would look like in a question 1. It's the exact same working. You would reduce delivery vans and depreciation, and you would reduce creditors by the full amount of the debt. So that's that one done. Next one, April. He's revaluing land and buildings to 1.2 million, which includes land at 180,000, and that's to do with the final working. So 727 plus 350 is 877. We have to get that up to 1.2 million. So that's an extra 1077. So that's an extra 123,000. Land and buildings is going up by. Depreciation, anytime we revalue, remember it goes to 0. So minus 54 plus 54 gets you to 0. And then revaluation reserve in our balance sheet of the two added together, which is 177,000. And the balance obviously at 177,000. So that's our April. May. Now, it says we received a bank statement showing a direct debit of 8.4. Right, so the bank overdraft goes up by 8.4. Alright, to cover advertising for the year ended 31st of the 12th. So I'm going to go find my advertising, which in effect is my expenses, right? Advertising is an expense. We've got expenses due, so that 8.4 gets rid. There's no longer expenses due, so we get rid of that. Okay. Then we got 9,900 to cover rent, so we've received 9,900. A credit transfer means we receive it, so that reduces our bank overdraft by 9,900. So in effect, our bank is minus 1,500 there. So rent receivable is it's rent receivable prepaid, so it's a liability. And that rent receivable prepaid is 11,000. Sorry, it's 9,900. So the 9,900 is your rent receivable prepaid. Now you know it's, if you always just put in whatever it is. So if we've received money, it's rent receivable. It's always going to be prepaid here. In this context, so that will balance out at 0 and 0. Now there's another part to that, okay, but we do it in December. May, I might go and do it now actually, just while I can. So May, June, August, December, and December. Okay, so we look at each of these expenses, right? And we have to work out how much goes into next year, how much is due or prepaid next year. So if we read the 9,000 or the 8,400 to cover the advertising for the year on the 31st of the 8th, 2012, that means at the end of the year there's going to be, assuming we're continuing the advertising on a rolling basis, we've got 9, 10, 11, 12. So we've got 4 months due. So in the total here, it's going to be 4/12 of something. Okay, so now you think it's 8,400, but if you remember, there's a due at the start of the year of 4,200. So in reality, 4,200 is what's this year's advertising up until the 31st of August. So 4,200 is a year. So we need to find 3/12 of 4,200. It is not that 4,200. It's 4,200 minus 8,400. Or sorry, 8,400 minus 4,200. It's the fact that 8,400 includes this money that we owe of 4,200. So the 4,200 is for the year. So 4/12 of 4,000 of 4,200 is going to be our total. So when we get to the total, it could be 4/12 by 4,200, which is 1,400. Now then we have to work out in the December column, how do we actually get to that? So 4,200 minus 8,400, and we're at minus 4,200 then. So how do we get from minus 4,200 to 1,400? We're going to have to add on, what's that be, 5,600. So now if you look at it, 4.2 minus 8.4 is minus 4.2, plus 5.6 is 1,400. So there's 1,400 due at the end of the year, which means we're transferring the advertising for the year is 5,600. Okay, so the second one, the rent then, so we have to put in that new, so that's 9,900, and that covers 11 months. So 11 into 9,900 is 900 a month. and it's rent receivable from the 1st to the 3rd 2012 for 11 months. So 1st to the 3rd 2012 for 11 months will give you March, April, May, June, July, August, September, October, November, December, January. So it brings you to January of 2013. So at the end of the year, you're going to have 900 one month. So 9,900 divided by 11 months multiplied by 1. So it's 900. So then how do we get to 900? It's 9,900 down to 900, so it's minus 9,000 there. Okay, and the balancing figure for that is going to be 3,600 profit. Okay, so 3,000, so minus 9,000 plus 5,600 is minus 3,600. So you balance that off at 3,600. So for that second December month, the balance is the profit. Okay, so that's that one done. So we can go back to June. I'll go through that again in class loads of times because I know that causes a bit of confusion. June, a delivery van which cost 20,000 was traded in against a new van costing 30. So what's happened to the delivery vans? They've gone down by 20, and then they've gone up by 30, so they've gone up by 10,000. An allowance of 5,500 was made on the old van, so you got 5,500, which means you wrote a check for 24,500 for the new van. So your bank overdraft goes up by 24,500. Now, what's happened to the depreciation? Depreciation to date on the old van was 17,000. Well, you don't have that depreciation anymore, so that has to go up by 17,000. So depreciation, remember, is a minus, so to get rid of it, you add it back on. So that's 27,000. This is 24,500. So therefore, that has to be the profit and loss of 2,500. Now you can think of that a different way. The van cost 20,000. Depreciation was 17,000, which means its value was 3,000. If you got given an allowance of 5,500 versus the 3,000, that's a profit of 2,500. Okay, so it should balance at 27,000. So that's June. Okay, there's two workings in August. So a payment of 2,400 was received from Galvin. So what's happened to your bank? Your bank overdraft has gone down by 2,400. His debt had been written off as bad and now wishes to trade again. This represents 80% of the original debt. So we know that the full debt is a bad debt recovered. So we go 2,400 divided by 80 multiplied by 100, and that's 3,000. Now you know that bad debt recovered is other operating income, so it increases your profit. So your profit goes up by 3,000. Your debtors then has to go up by 600. So he owes us 600 of the original 3,000 debt again. So debtors go up by the amount that hasn't been paid. And that then balances at 600 both ways. So that's the first part. So on the same day, goods were sold to Galvin for another 450. Now, I'm going to just put it in as a 2nd December or as a 2nd August just to show you what we do with that. So debtors go up by 450. Stock will go down by the cost price. So you've sold the stock, you don't have it, so it goes down. So it's a markup of cost of 25%. So we go 450 divided by 120 multiplied by 100. So stock is going down by 300 and so it was a markup cost of 25%. Sorry, so it's by 125. So stock is going down by 360. So what have you done? You sold stock that it cost you 360 for 450, so you made a profit of 90. Okay. Now what you're going to see in the marketing schemes is the two of those added together. So your profit and loss there will be 3090. Just going to put these together now. Your debtors will be 1050, and that your stock will be minus 360. Okay, now I can just delete that. Okay, so I hope that makes sense. Our December, we're going to do our depreciations in December. Depreciations on buildings is charged at the rate of 2% per annum of the value on the 1st of the 4th. So that's grand. We only have to worry about the value on the 1st of the 4th. So the 1st of the 4th was what happened. He revalued them to 1.2 million. So we'll just do it as working. So it's 2% of the revalued amount. So revalued them to 1.2 million, which includes land as 180. So it's 2% of 1.2 million minus the 180. By 4/12. Sorry, by 9/12. It's revalued on the 1st of April, so you have them for April. So that's 15,300. Just let me put that in, that's by 9/12. So that's 15,300 into your depreciation of land and buildings. And that's a minus. Which will go then into your profit as a minus. However, there's depreciation on delivery vans of minus 28,000, which means your overall profit and loss is the two of them together, which is 43,300. Again, if you think about depreciations are expenses which reduce your profits. Now, how did I end up with, sorry. Sorry. Let's just choose 5, 6. So that should be 3, 4 there, not 3, 6. That wasn't balancing. Alright, so then just finish it off, total them all the way across. And obviously it's quite easy for me, I'm doing them on a spreadsheet. If you take a bit of time and make sure you take your time at them. And they should balance, well they will balance if everything else balances. So that's that question done. Obviously I can do them fairly quickly, but the one to be wary of, I suppose the ones to be wary of, any of the ones you haven't seen before, don't know what to do, but I think that May one, I'm not sure how well I explained that in some of the other videos, but it's not too bad here. Alright, we'll talk to you again.